What's up, everybody? Welcome to this Alaska VA Loan Home Buying Webinar. I'm Jordan Savage with Alaska Realty Experts. We are brokered by eXp Realty here in Anchorage, Alaska. And I started out probably similar to most of you. I was active duty Air Force. I served for 9 years. I ended my time actually here at JBER and got into real estate. And I just love giving back to my military brothers and sisters by educating them on using their VA loans so nobody has to struggle and they have all the information they need to make a wise choice when it comes to buying a home. I'm joined here by Connor Kolup. Connor, go ahead, take it away.
Yeah, what's up, guys? So my name is Connor Kolup. I'm a mortgage lender by trade. That's my daytime job, right? I like to say my weekend job or even early morning job is a Black Hawk crew chief here on JBER in the medevac unit. So we get to have a lot of fun, and my passion really not just the fact that I'm in the military and kind of seeing and understanding like, hey, you can't call your commanding officer and say ask for a verification of employment, right? There's different ways to do that. ETS dates, like what in the world is that, right? Most loan officers don't actually know. It's super important. But really, like, even a guy in my unit just approached me and said, hey, I just got pre-qualified by a bank that sounds like Veterans Administration, and they pre-qualified him. He's ready to go. He was going to put an offer in the house, and he came to me. I said, well, how are you using your VA loan? He says, well, they said that they're going to pull my certificate of eligibility after we get into contract or closer to the contract date. The guy had only been in the Guard for about 4 to 5 years, so he's not even eligible to use his VA loan. So that right there is the reason why I love helping out my brothers and sisters in the military, is because frankly, there aren't enough professionals in the industry that understand military, what their income looks like, what a PCS move means, what TDY money is. They just don't understand it. And so giving back not only in knowledge, but having my team trained in veteran loans, VA loans, so that we don't have to go over those weird speed bump issues of what a lot of lenders put VA buyers through. So, yeah.
Awesome. So I'm going to take back over here really quick. So just to go over what we're going to cover today, you're going to want to have a paper and a pen or pencil handy, so you can take down a couple quick notes here. We are going to fire out, for those of you that stay the entirety of this presentation, we are going to fire out some documents that are going to help you with your buying process. So if you miss something, we are going to fire it out. If you stay to the very end, we'll send you that link and you can go there and download all these documents. So what we're going to cover today, Connor's going to cover credit scores, what numbers matter, and he's also going to cover getting financed, the do's and don'ts. And I'm going to take back over, and this is Jordan. I'll be covering the buying process, what it's going to look like, and then at the end, we'll wrap this thing up with some Q&A. So we're going to fire it back to Connor with the credit scores.
All right, so one of the reason why we're starting with credit scores is because it's usually like the first question that someone asks in the home buying, process, right? So it's probably the third thing that I do when I do a loan application is pull credit to verify that we don't have any issues to fix there. So income, assets, those are all issues that we're going to cover, but credit is that first step of, do we even qualify for the loan program? So today we're going to talk specifically about the VA loan. Now, the VA, the Veterans Administration loan, doesn't actually put out a minimum credit score. Technically, they don't care. However, in order to meet qualifications, you have to have very few late payments, so on and so forth, no collections, all of these different things that if you have a 580 credit score or less, you're not going to have, you're going to have those things on your credit report, right? So 580 is really the lowest that I've ever seen any bank. So that's our standard. 580 is the lowest credit score that I can approve a veteran to buy a home with. Now, with that comes some extra baggage, some extra qualifications that we got to jump through, some hoops to jump through. So 620, I like to say, is like that one credit score that if you come up above 620, you get to shuck that weight off your shoulders and not have to worry about it nearly as much. You have to jump through a whole lot less hoops to get through the mortgage process. So 620. Now, is that the best credit score? No, not necessarily. That's really the lower end of the spectrum. It's good enough to buy a house. The VA loan actually has some of the lowest interest rates comparative to any of the other loan programs out there, mainly because it's backed by the government. So it's a lot less risk on the mortgage lending company. Now, with that lower credit score, you're going to have a little bit higher of an interest rate tag there. So is it worth it to get your credit score above 720? Yes, absolutely. And that's something that I do with all my clients throughout the mortgage transaction. I'll pull your credit initially. Okay, do you qualify right now to buy a house? Yes. Okay, you're qualified for this amount. Push out the 90% letter, let the realtor start his process looking for a house, right? Because the difference is going to be maybe $100, $150, $200 a month maximum. That's going to make a change on your monthly payments. So with that being said, it's better to be in the house with a 620 credit score than wait 6 months to a year with a 720 credit score, because you're going to lose that equity position that you'd have over that year, right? So during that transaction, we're going to be trying to fix your credit, whether it's paying down credit cards, getting rid of some collections out there, closing out some accounts, maybe opening up a new trade line, maybe with authorized user, a great way to up your credit score. Credit utilization, we'll talk about that here in a second. Those are all things that we're going to be tracking, and I'll re-pull your credit if we've fixed some of those things and see if we can get that lower interest rate there at the end of the transaction. Transactions are typically 25, 30, maybe 45 days maximum. So we've got a little bit of time to work with it. We've just got to wait for those to report, and I can make them report as well. So those are some of the cool things there. What makes up a credit report? So in a credit report, imagine it as a pie wheel. There's two big 30% chunks that get taken out, one of which is credit utilization. So they want to see that you have a couple revolving accounts. That secret sauce number is 3, maybe 4 revolving accounts, so credit cards that you have open, whether those are joint with a spouse, maybe an authorized user account. In fact, in my personal story, I got put on an authorized user account that have bigger balance than any of my credit cards, bigger ability, right? So it had a $12,000 limit that I could use, and that upped my credit score almost 70 points immediately after getting put on. That's an authorized user card. Talk to me about that offline, and we'll go over what that is. So 3 to 4 credit cards being open, active, being used every once in a while is the best. And then loans. They want to see that you have a couple loans. You can't have good credit without owing money, right? They got to test that you have good credit. And then maybe a couple closed accounts, no collections, no draw card marks, none of that kind of stuff. So credit utilization is huge. It's about 30% of your credit score. The other 30% is credit card utilization, right? So what your ratio of so let's simplify it. You have a $1,000 credit card, and that's all you have, or maybe a couple cards that make up to $1,000. If you spend more than $300 on that $1,000 card, it's starting to get into the derogatory range. Anything over 50% use, so $500 or more being used on that $1,000 limit, is derogatory. It's now not good for your credit. So you want to keep that number as close to zero as possible. Lower than 30% is best. And then you still want to use all of your credit cards at least once a month, whether it's paying for gas, paying it off, those kind of things, or having a reoccurring Netflix bill, something along those lines, so that it's showing that you're actively using that card. It's not just cut up and thrown in the trash. So that's stuff that you want to do, but definitely don't go over that 50% utilization on credit cards. Authorized user credit card is what can help fix that if you have an issue with utilization, if you've used too much of your limit. So the rest of it is just a whole mix-up of different things that they're going to accumulate to your credit score. So we'll want to look over that first and foremost. The next topic, so if any of that stuff affects you or you feel like you can fix, then get in touch with me and we'll go through that process. I don't want to go too in depth on anything, different situations, because everybody's going to have different situations. So getting financed, do's and don'ts. So first, getting financed, we've touched on it, the certificate of eligibility. That is about the first thing that I'm going to do as a mortgage lender when we're doing a VA home loan. As soon as we pull the credit, I'm going to send over some information over to my processor, who's going to go directly to VA and request your certificate of eligibility. That's going to tell me if you have any retirement income, disability income, if you have another house mortgage that's out there on your certificate of eligibility, using up your eligibility amount. It's also going to tell me if you have had any foreclosures or anything along those lines, and then also what your available is. And then if you're exempt or non-exempt from the VA funding fee, that's the only downside to an entire VA loan process is the VA funding fee, and we'll talk about that here in a little bit. That's the most expensive part about the VA loan process. So certificate of eligibility first and foremost, and then we're going to go into some of the do's and don'ts real quick. Do's and don'ts. Don't get your credit pulled by anybody. If you're shopping for a mortgage, which I do recommend shopping around for a mortgage to make sure that you're getting the lowest rate, don't trust the first guy that you talk to. You don't have to have them pull your credit to shop around. There are people I'll give you the warning. They're going to say, yep, we can absolutely beat that, do the loan application. They're going to tie you in, whatever it takes. And then they expect you just to be too lazy not to leave. Don't fall into those traps. Talk to your realtor, confide in them and say, hey, this is what's going on. Can you help me through this? The realtor is, they have a responsibility to the buyer to make sure that you're getting the best deal possible. So just check them up on that and make sure that you're doing the right thing there. So pulling credit, as long as it's not someone else other than a mortgage company, then you should be fine. So that would go into don't get new credit. Pretty obvious. You're shopping for a house. You're in contract. You're like, awesome, this house is beautiful. It's got a huge living room and I don't have any furniture. Let's go over to Sadler's Home Furnishing. I'm going to buy $5,000 worth of furniture, but I don't want to pay cash for it. They offered me a 0% interest credit card. I'm going to get that because it's basically getting it for free, right? You're not going to pay any extra. You're just going to pay on it over the next month. That is getting new credit. Okay, so now I've got to stop the whole loan progress, get a supplement from that company, find out what the monthly payment is, which might put you over your debt to income ratio, which could make it so you can't even have that big, awesome living room in the first place. Trust me, I've seen it. None of my borrowers have done it, but people in the office have seen it happen to them. Obviously, it goes in like the large garage, right? I'm buying this huge garage. It's beautiful. I got to buy a boat to put it in there with the trailer, right? That's a good deal. Don't do it. Cars, boats, furniture, nothing. Don't get any new consumer debt at all. Unless you talk to your loan officer first. Maybe it won't be an issue, but at least talk to your loan officer first. Don't make any big purchases with cash or receive anything in big purchases or sales of cash, right? So if you've got a car, maybe it's worth $5,000 and you're going to go sell that. First and foremost, you want to have a bill of sale if you're going to, but I'll recommend just go talk to the loan officer, say, hey, I need to sell this in order to buy this house. It's $5,000. I'm going to take that cash. I'm going to deposit it into the bank. So imagine this as an underwriter, right? So this is a couple steps up in the mortgage process. The underwriter's going to look at your bank statement and they're like, wow, this guy, he had a couple thousand in his bank and he just deposited $5,000 in cash. I wonder where that came from, right? Back in 2008, 2009, there was a lot of money laundering going on. And so there are rules against it. I can't even use that money to qualify you at all. We can't touch it. That balance wasn't there before, and I can't verify where it came from. I can't use those funds for the transaction. So it's very, very important that you don't sell anything and deposit large cash or pull out what we call mattress money, pull it out from under the mattress and deposit cash. Try to stay as in one small box as possible and stay the exact same for the entire transaction. Unless you talk to your loan officer, there are ways to make it make sense tracking money, but we got to talk about it before it happens. Earnest money. Jordan's going to talk about earnest money. This is another piece of the pie when you're going to be spending some money in order to get into this house. So earnest money, you're going to be transferring it, whether it be cashier's check, written check, or a wire transfer over to Jordan's brokerage, right, in this situation. So Jordan's brokerage is going to hold on to that money. They're going to put it in an escrow account, and then they're going to use that there at the closing table to either get back to you in the VA loan if we get enough seller credits, or use towards your down payment or closing costs. So when you're doing that, don't give cash. Don't have a family member send over the earnest money. Do it from your bank account because I have to verify that it was withdrawn from your account so I can use it in the transaction. This happens all the time where we now have to take that earnest money, give it back to you, and then you have to do a legal way, something that I can track. So make sure you don't do that. Let me check my list real quick. Max out credit cards. So if you need money for down payment or closing costs, don't live off your credit cards. In the event that your credit report expires and you've maxed out your credit cards, now your score drops, that's going to change your qualification completely. So just stay in that line and try not to deviate very much. And then I'll give it back to Jordan. That's a lot of what we're talking about there in the qualification, what I'm going to look at first. Debt to income ratio, stuff like that. With military, we're going to use your military income, but we can talk about that a little bit later, Jordan, if you want to take over for a little
Awesome, Connor. Thank you so much, man. I really appreciate that. Tons of good information. I hope your pens were flying. So I'm going to go ahead and share my screen, and we're going to dive right into what the home buying process is going to look like for you. So once you're pre-approved, once Connor's gave me the green light to move forward, this is exactly how we're going to proceed. So we're ready to shop now. We're going to go out, and step number one is we're going to start trying to find that house, right? So once we do find that house and you're completely happy, we're going to make the offer. So what I'll do is, and you will do is, we'll sit and we'll talk, and we'll figure out where you want to come in on your offer. We'll talk about all the terms of an offer, and then I'll go and write that up and send it out to you for signature. Also, at the same time, we're going to pop back to that earnest money that Connor was talking with you about. We're going to take that 1%, which is an industry standard up here. Sometimes it's less. I wouldn't get hung up on that too much. That's one of the 3 times in a transaction that you would have to write a check in the process. So it's usually 1%, but don't get hung up on that, because we have been able to negotiate times where we understand you're coming through a PCS and cash is a little bit tight. We can make it work. So don't get completely hung up on that. But the 1% is the industry norm in Alaska. We will also submit a pre-approval from Connor. So what Connor's going to do is he's going to send me a letter that says you're a majority of the way there for getting your new financing. So from that point, if they accept the offer, we're moving on forward. We're entering in what is called the due diligence period. Okay, so we've got our offer accepted. We've got that 1% of earnest money sitting in a trust account with my broker, and that'll be waiting for closing. And then we've also got the lender pre-approval. So now we're moving forward. If we do get a counter offer, you can see here, if they do counter us back, we can choose to accept that or not accept it. If they counter us and they say, hey, whatever, it's usually in the terms is where you'll see a counter offer. You'll see closing costs a lot of times will be a negotiable term. Sometimes they don't want to pay for a home warranty or something like that. And we'll talk about that until we are, in fact, accepted completely all the way through. And then we have a deal. So now that we have a deal, we're going to do our home inspection. We're going to round the corner and come down to our home inspection. Now, that's anywhere from $400 to $500, usually depending on the square footage and the inspector. Okay, so that's going to be a time where the home inspector, it's an awesome thing because he doesn't work for me. He doesn't work for Connor. He works for you. So the home inspector is going to go out there working for you as a neutral third party, and he's going to make sure that he finds as many things as he possibly can. Now, this is a non-destructive inspection, so he's not going to break down walls, right? He can't see through walls either. So he's going to basically identify everything that he can see from the outside, right? And so we're going to go all through the property. He'll get up on the roof if it's not the dead of winter and check out your roof. He'll go through any crawl spaces, make sure that that's all looking good. There's usually a lot of pipes. Sometimes in Alaska, there could be a high water table. He'll check the sump system, make sure that that's all working properly. It's a pretty in-depth inspection that he's going to perform, or she. They're going to accept cash, personal check, or credit card. Some you have to pay at the time of inspection. I know some that really don't care as long as they get paid in a relatively quick amount of time. And so from that point, we will receive a report from the home inspector. Now, what we're going to do is we're going to go through and we're going to see what you want fixed, like what you have to have fixed versus what you would maybe want to have fixed. Because I always try to put yourself in a position of the seller. There's going to come a time where you're going to want to sell this home. Now, are you going to want to be nickel and dimed for every little minute detail, right? Maybe there's a scuff on the wall. Maybe there's a doorknob that you're probably going to replace anyway that's not functioning properly. Is that really something that you want to kind of get under the skin of the seller with? So that's something I would just caution you to kind of pay attention to. And we'll go through all that when the time comes. So
hey,
once
George, can I jump in here real quick?
Yeah, go ahead.
So I wanted to do a quick explanation on one thing. So home inspection, do you have to buy one? No, you don't have to do a home inspection.
Correct.
It's not necessarily part of the home buying process. However, like Jordan said, it's highly, highly recommended.
Right.
In fact, I know of real estate agents that won't work with you and won't go into the transaction unless you do agree to buy a home inspection, because it's a huge liability on you. Buying the home, say you find a roof leak and now your whole roof has to be replaced. That's $10,000, $15,000 potentially that a home inspector would have noticed, right? They're going to crawl up in the attic, in the rafters, down underneath the house, and they're going to look for everything, especially after the earthquake. If this is the first time it's been inspected since the earthquake that happened.
Absolutely.
It could be pretty common. There could be some serious stress fractures even in the foundation, which pretty much is going to destroy your house.
And man, right? That is a really, really great point, because it's really penny on the dollar compared to, having to replace a roof, right? And that's something, that's the reason why we have this period of time, is so we can truly do our due diligence, so that we're not kicking the can down the road to where it's something you have to pay for when you leave. And something like a new roof, that's a showstopper. That could be a potential deal breaker. We would ask them to repair that. Sometimes hot water heaters aren't up to snuff or maybe not working at all. That's things I've had replaced. We're going to want to have the HVAC system, right? The furnace, heat's pretty important in Alaska. We're going to want to make sure
and it can be super dangerous if it's not taken care of.
Yeah, very dangerous, very dangerous. So great points, Connor. Great points, man. Absolutely.
You're probably going to touch on this a little bit later, but the home inspection is a lot different than the appraisal inspection. There's going to be two inspections.
Right.
The appraisal inspection is not establishing safety of the property. They're going to look over some code stuff that they have to look over, but they're there to establish a value for the property. So they're not going to go there and say, hey, you guys should probably ask for that to get fixed. Whereas the inspector is going to go through and make sure that your family is going to be safe when you move into the house and that you're not going to be coming out of pocket with a huge amount of expense. The appraiser is probably technically more important, right? Because I have to have it as a loan officer to establish value to see if the house is worth it, should take a little bit of weight off your shoulders knowing that, hey, if I'm buying this house for $200,000 and it's worth $200,000, then I'm getting a good deal, right? Or they're going to come back and say it's worth $210,000. And some of the questions, we've got some questions written down also to cover, but we'll talk about what happens when appraisal comes in low at the end there, Jordan.
Absolutely, man. Awesome. So at this point, we've talked about repairs pretty well. So we'll create an amendment and we'll fire that out to them, and they can either agree to do all their repairs or we can continue to negotiate. They can say, no, we don't want to do that. Well, say they say no. Say they say no, and it's an absolute deal breaker for you. Say the roof is bad and we ask them to repair it and they say no, we can walk away from the deal at that point. So that would be a deal breaker. So that's what's awesome about that is that for $400 to $500, you just discovered that there's a major flaw with this home that the seller's not willing to fix. So you're not going to get that $400 to $500 back, unfortunately, but you save the headache of having to replace a roof on the way out when you decide to sell your home, right? Mm-hmm. So that's the value there. That's the value in doing that, is kind of knowing what you're walking into. So the next step, say we do negotiate repairs. They say we're going to fix anything you want, not a problem. This is what we're going to do. We move on to ordering the appraisal. Now that's something you're actually going to do with Connor. I don't know if you want to touch on this really quick, or do you want me to proceed?
So we can touch on it really quickly. So depending on how Jordan writes the offer, every situation is a little bit different. If they have to sweeten up the deal, they can actually offer to say the buyer will front the appraisal costs. Just depending on the transaction and depending on who the borrower is, I'm either going to front those funds for you or have you front those. Typically in Alaska, the seller pays for the appraisal, but sometimes they won't pay for them until the end of the transaction. Someone's got to front those funds to the appraiser to go out to the property and appraise the property. So we'll order that appraisal as soon as physically possible, because VA appraisals in Wasilla take 24 days, whereas in Anchorage is 12. And they have a set VA guideline and they have to have it back by that certain date. Or we can throw a fit and make them rush it for not have to pay them extra for it. So if we're on a tight deadline, we can order a rush, cost like $100, $150 more, and they can churn that out a whole lot faster on some appraisals. But for the appraisal itself is anywhere from $800 to $850 that you'll put on a credit card or pay with check or a cashier's check. So that's something, you'll probably expect to pay that with most loan officers. I'm a little bit different than some, so expect to pay for that to get reimbursed there at closing, either towards your earnest money, your closing costs or down payment, or you'll get it back as a cash or check from title. So.
Absolutely. So if the appraisal comes in at or above value, so say you're buying a home for $150,000 and it comes in at 100, the appraisal comes back from the appraiser and it's equal to or above $150,000, we're proceeding. If it's not, basically they would need to lower the price to match the appraisal, right? So that does happen sometimes, which is kind of a bummer, and it can kind of throw off the vibe of the whole deal. It's pretty rare. Usually homes in Alaska are priced pretty well, and homes you typically sell within 1% of the asking price. It's usually the terms that are really negotiable. It's not usually going to be you're going to lower the asking price more than 1%. So say it's a $200,000 home, you can ask for about $2,000 off, but expect to not get $2,000 in closing, right? So if you want all your closing costs, you're probably not going to be able to move off of the asking price too much in the state of Alaska anyway. That's usually how it works.
And yeah, right now
Right. Currently. Yeah. So say it comes in at or above value, we are good. If the asking price was 150,000 and that's what we wrote the offer for, and the appraisal comes in at 150, we are good to go. So we will go on down here, and the homeowner's title insurance would be ordered. So your preliminary title would be issued. You would sign that, and that's going to be on order. That's basically the title company running any checks against the property to make sure there's not anything funny going on between the current homeowner and the muni or any previous homeowners. Also known as like there's not any liens or anything like that against the property. Can I really important. Yeah, go ahead.
All right. So title insurance is one of those things that you're going to see most likely, the typical situation, you're going to see the charge on the closing disclosure. Like, why did I pay this much money for nothing? Right? Because you're going to see the title report, you're going to sign it. You're probably not going to understand a lot of the verbiage that goes into it. But as long as your lender and realtor say there's no issues on it, it's going to be good to go. When there's an issue on a title report, that's what these guys get paid for. They do a ton of research, not only on the property, but on the buyer and seller as well. So if the buyer has a tax lien against them from maybe past due taxes or a property that they didn't pay their taxes on with the municipality, that tax lien is going to go with them wherever. So if me as a buyer, I go to buy a house and I've got a tax lien against me, the IRS is going to want to take first lien position on that house, which means that buyer can no longer buy that house, period. And then on the other side, the flip side, well, not period, you can negotiate it. It's very, very difficult, or you have to pay it. It's going to be one or the other. So cross that. Hopefully that doesn't come up, right? You should know if it's going to. And it's going to be attached to every property that you buy until you have it paid off. So
absolutely, very, very man. So it's pretty rare, but I have seen it happen. There has been some issues. We'll talk a little bit more about it at the end. Yeah, there has been what's that?
So after closing, if they would have just had like the roof repaired, right, maybe that's your repairs. If you close on that property, that title insurance company is going to insure you from any other liens that weren't yours to be placed on that property. So if that roofer who just did $15,000 of work doesn't get paid somehow, some way, they have the right, because they did the work on the property, to put a $15,000 tax lien on that property. Now, the title insurance is going to insure you against getting charged those funds. So they're going to track down the seller. They're going to try putting the seller into collection, this, that, and the other. If they don't collect it, then they'll pay for that themselves. So it protects you from a whole lot more than just I'm paying them a lot of money and I see it on the closing report and that's all.
Right. No, for real. No, it's awesome. It's basically protecting you, like he said, of basically adopting any liens that weren't yours. So moving on here. So if you buy, you can see here there's a water and septic test anywhere from $900 to $1,500. If you're buying in Anchorage, more often than not, this will not be an issue. This is more something in the valley, in the Matsu Valley, nearby Wasilla, Palmer. It's a little more common to see this kind of stuff. Sometimes in Eagle River and Chugiak as well, you'll see this kind of stuff. But usually in Anchorage, you won't be running into the water and septic test. But this is just kind of a good number to keep in your head because this is usually a seller cost, though. So this is usually a seller cost, the water and septic test. So that would usually not be a buyer cost anyway. But it's just definitely good to know that when you're buying that property, when you go to sell, there will usually be an additional cost for the water and septic. So say it passes those tests, we're moving on, right? We're going to make sure that if there are any issues with the water and septic, we negotiate those terms. And then from there, if everything's clear, and the homeowner's insurance, the homeowner's title insurance comes back, we're basically clear to close. So they'll issue what's called the closing disclosures, otherwise known as a CD. And we basically need to sit and let that thing mature for 3 days prior to you actually going into the title company. I will be there as well. Usually Connor will be there as well before we can go to title and actually close this thing. So basically from there, we're going to go down. Once the CD is issued, we're going to go do a final inspection. You could repay the home inspector, usually around $200 to do a follow-up inspection. If you did have some major issues that you want a licensed and bonded home inspector to come out and take a look at for you, right? Because I'm not a licensed bonded home inspector, neither is Connor. So we're not really qualified to make those assumptions. So if we did have major issues on the home inspection, that would be another buyer cost. Sometimes we could ask the seller to do it, but usually it's a buyer's cost. It's, of course, everything's negotiable. But that would be what that is. And then after that, once we're happy with all of the repairs, we'll do the final walkthrough. We're basically going to go out to the house, do that last walkthrough before we actually go to closing, and just make sure that everything's in ship shape, nice and clean. All the repairs are 100% done if we had to have anybody come back again, and then we're good to go. So before closing, you're going to want to, if you do have to bring any funds to the table, you're going to make sure that that's a certified check. And that will be for the amount required at signing. Of course, we're going to let you know and remind you prior to you going in and signing. Usually the night before, I'll let you know, or a couple days before, we'll have a number nailed down, and we'll get that to you and remind you that once again, it needs to be a certified check. We're going to go to closing. You're going to sign. We're going to also go through all of the documents. So at the title, title company will basically have a representative there that will walk you through every single item step by step. And basically you're just going to sign for everything. It's kind of crazy. You're kind of signing your life away. It's almost like re-enlisting in the military. So usually in Alaska, go ahead.
It's almost as bad, except for there probably won't be nearly as many hidden terms and assignments in there.
Yeah, it's a little more fun than actually doing the enlistment paperwork.
So, I was supposed to get airborne, never got airborne. Been in the military 6 years. So
snap.
It is what it is.
Dang it. So usually in Alaska, it kind of depends. Usually closing's the next business day. That's kind of the standard here. So the next business day is when you're going to get those keys. Okay. Yeah. And we'll coordinate that at the time of closing. If you were happy with your experience or unhappy with your experience, we want to hear about it. We'd love your feedback, an online review or testimonial. And then we would ask that if you enjoyed your family or your experience and we did right by you, we would love a raving fan review to your friends and family so that we can help them find their home in Alaska as well. So do we have any questions here? Connor, is there anything you want to touch on?
Yeah, let me touch on some things real quick.
Awesome.
All right. So does it need to be a check at closing? No, not necessarily, right? Because I know a lot of military buyers are going to be with USAA, Navy Federal, some of these places, they don't have a checkbook, right? Nor can it be a checkbook because it has to be certified. And they can't walk into a location and say, hey, can you please give me a cashier's check that I can drop off? So you can wire these funds directly over to title. Now, very, very risky per se, right? And you can watch one of my past videos that I've done with some title agents. When you're wiring those funds, do not copy and paste wire transfer numbers from an email that you received. Okay, it's just got to be something that you verified, double check, triple check with your title officer, with your lender, and with your real estate agent. If you get a random email saying, hey, our wiring instructions have changed, here's the new wiring instruction, tell us immediately, because that's an issue. This is a huge thing nationwide where people have been wiring funds to the wrong place. If you wire those funds and they go to Bangladesh, then India, then back over to the United States, then Mexico, and they just travel around from bank account to bank account, you can't trace it. FBI will investigate, but that money's good as gone. And it's not the title. It's nobody's fault besides yours, unfortunately, when the investigation happens. If it happens the other way and title wires the funds to the wrong place, then it's on title and they'll insure against it and they'll pay for those funds. But if you're clicking that button to send, that money's good as gone. So please triple check that routing number and make sure you're going to the right place.
Yeah, man, that's great info. I want to hop over here to the chat real quick. Let me see. So Carrie is asking, what are the times that I have to spend money? So if you're taking notes right now, get that notepad out. Let's talk about the time that you're going to have to bust out your own checkbook, debit card. We don't want to rack up that credit card too high, as Connor alluded to earlier. So the 3 times you're usually going to have to write some sort of check or get a cashier's check is going to be the earnest money, right? There's going to be the 1% for the earnest money. That's an Alaska standard. Okay, so just easy math, $200,000 property, that's going to be $2,000. And that'll be deposited not into my bank account. That's going to go into a trust account with my brokerage. So that's 1. Number 2 is going to be on the home inspection. So, also I want to reiterate this on the earnest money. That is your money. So at closing, if we get all of your closing costs paid for, you will get a check back. Okay? So let me reiterate that again. That earnest money is just to show that you're serious about that property. It's a promise from you to the seller saying that I'm so serious about this home and I know that you're going to take it off the market for me, that I want to put this into a trust account to show you how serious I am. So say that deal falls apart. Say we don't agree on negotiation we don't agree on the repair negotiations. You get that money back. Okay. If you're like, hey, I don't like this, they're not going to repair the roof. I want my money back. I'm done here. So that's the one good thing. So you will be out the home inspection money, but you will get your earnest money back. So the second time is going to be that the home inspection money. So it'll be $400 to $600, sometimes less. I do know a guy that does a military discount. That's a home inspector. So it could be less depending on the square footage. If it is, that's awesome, but you will not be getting that money back. That's a one-way street that will go to the home inspector for his services rendered to you. The last time is going to be, so there is kind of a caveat here, because you could forward the funds for appraisal to Connor that is not in Alaska standard, right? So it's like kind of like 3.5 almost, but usually that's not really typical. I try not to do that. It is a bargaining chip, but that's not always true. So that could be, but the last time would be at the closing table. If you did have any closing costs, that's when you would have the third time to bring money to the table. Go ahead, Connor. I see you're itching to say something. What do you got?
How'd you know that? All right, no, I had a follow-up question. So kind of a two-part question. Part of it was, let's see, how do I get my earnest money back? So I'm assuming this is talking about when at the closing table. So when you get your earnest money back, say you get to the closing table, it's all going to be pre-negotiated. You'll talk to your loan officer about how much approximately you're going to be getting back. You may not get all of it back. Hopefully, it's my job to set it up from the beginning for you to get all of it back, and then hopefully then some. And so if you get your earnest money back at closing, you're going to sign. Everything is going to go through all the wiring funds and everything from the lender to title to the seller. All of that stuff's going to happen. The next day, they're going to record with the state. That next day, they're going to either give you a check. You can come in and pick it up from them. They can direct deposit it back into your account. So they'll take care of that in the closing appointment to discuss, hey, here's this check. If you can pick it up tomorrow, that'd be great. Or we'll wire it into your account. What's your account number? There's going to be a wiring fee of like $2 or something along those lines. So you'll get that back, whatever's left of it. Now, if Jordan over negotiates, right? So depending on the day that you close, you'll have prepaid interest, and that's my job to tell Jordan. So he's over negotiating because of me. But I'm going to go through. I'm going to go, okay, what about when approximately are we going to close? Say we've got 28 days. Now we've got 28 days of prepaid interest. And then we've also got taxes that are going to be due. So you're going to get a reimbursed from the seller for some of the taxes that they've been living the property. And depending on if you're in Anchorage, Wasilla, Fairbanks, Eagle River and Anchorage are the same. But you're going to owe a certain amount of taxes depending on the time of the year that it is. So it may be 3 months, which is more typical out in Wasilla. Anchorage, depending on the year or time of year, you're going to be 6 to 12 to maybe even 13 months of taxes. And then the seller is going to reimburse you for quite a bit as well. So those are all closing costs that the seller doesn't typically pay for. They're your closing costs, but Jordan can negotiate for the seller to pay for those closing costs. Now, if Jordan over negotiates and there's money left on the table, you put $1,000 in for earnest money and you got $1,000 left back, plus another $1,000 that we're not using. So now we have two full $1,000 that we're not using. You're going to get the $1,000 of earnest money back. You can't make money on the purchase of the home. So I can't give you that at $1,000. Does it go back to the seller? Absolutely not. That can go to pay for a home inspection, a home warranty, anything that happened in the transaction. We can get paid with those funds. It can even go to pay off student loans, credit cards, auto loans. VA is the only program that will allow you to do that. The only one. So that answers both questions. I just went straight into the other one, which was, what if there's more closing costs from the seller than there are fees? So you're going to get that back, but we have to put it, you can only get back what you put in, and then the rest is going to go towards credit cards, which is a super awesome tool that VA allows us to do. Again, only program that allows you to do it.
Absolutely, man. That's awesome info too. That's like next level stuff.
Yep. You got any more? I think I've got.
Let me see here. I'm checking out the questions.
We had appraisal low. What if the appraisal low comes in, but you answered it right after that question got answered?
Right, I did answer. So that would be up to the seller. So if an appraisal comes in low, that would be up to the seller to lower the price to the appraisal. So they kind of have to bite it on that money. That's kind of how that works. Or it could end the deal.
if
it
it's
could end the deal.
if it's the perfect house, like
Right.
you'll absolutely die if you don't get this house. You've fallen in love with it, which the first rule of buying real estate is don't fall in love with the property that you're buying until you buy it. So if it's an emotional decision, you tend to lose more money on those a lot faster. So if you do accidentally fall in love with the property, you can come in with the difference as a down payment, but it's money out of your pocket that doesn't need to be spent. And frankly, when you go to sell the property, it's not going to be worth that much more, right? So something to watch out for there.
Awesome, man. Awesome. So I just want to say thank you to Connor for giving us the time here. I'm going to actually cut back over to the main screen. And I want to tell you guys to keep calm. And thank you for attending this VA home buying webinar specifically for Alaska. Connor, you have any closing remarks you want to make here?
Yeah, can you jump over to the first screen? The screen, yeah. Sorry.
Absolutely.
With our information on it.
Oh, for sure. I think we just got round robin this.
That's got my location on it with my phone number. It's got Jordan's phone number, where we're at. So if you guys have any questions, shoot us a call or an email. I answer my phone until about 11 o'clock at night, and then I put it outside my room because I guarantee you I will still get phone calls, and I work with clients around the nation. So I'll have people from the East Coast calling me at like 3 in the morning. And I'm like, okay, put my phone on silent. Don't call me anymore. So from about 11, then you can call me anytime after like 7 in the morning. So pretty much anytime, give me a call. If I don't answer, I'll give you a text and I'll call you right back.
Absolutely, man. So texting is awesome. If you can't, if it's too late to call, feel free to text and we'll get back to you in the morning. But at the end of this presentation, you will be getting an email that will also have our information in it. And there's also going to be a thank you page as well that's going to lead you to an application. If you're ready to get started with your home buying process today, you can fill out Connor Kolup's application on the next page, submit that to him. Once you submitted that to him, it will also redirect you to, if you want to start your home search, you can start your home search at my website, which is jordan.alaskarealtyexperts.com. My side is the fun side. Connor's the boring financial side. But hey, we'll get it done one way or another, and we're going to have a great time finding your Alaskan home. So
we didn't even really touch on the risk of why you have to go through the boring side of the numbers first. So let me tell you guys, like in Alaska, when the perfect property hits the market, it's gone fast. Like if it's a good deal, a beautiful home in the right area, like Eagle River, maybe near base, especially for military buyers, as soon as that thing hits the market, you're going to have a multiple offer situation potentially, or a couple days go by and that thing is pending, almost guaranteed.
Absolutely.
Maybe not guaranteed, right? But if it is the right price, it's gone. And so without having that 90% letter, what's going to happen is that you're going to be like, Jordan, I've got to get into this house and I've got to buy it. It's perfect. It's a perfect location. It's a perfect price. It's got 4 bedrooms, right? It's just perfect. Well, then he has to redirect you back to me because you can't put in an offer unless you're qualified. And when I get through the qualifying, if I need additional information, maybe I need taxes, maybe I need stuff that you don't have access to right now, and it's going to take you a day or two, I can't qualify you until I have that information, which means you can't put an offer in, which means we're going to burn precious hours. Properties will go on the market and pend an hour later. Like it happens for the right property. So if you're not ready, you're going to lose that house. And I just had some clients do that. They wanted to take 24 hours to sleep on it. They wanted to get on their bicycles and ride around the neighborhood. That house was pended before they could make their decision, literally before the next day. And they are ready to buy it. They just wanted to see the neighborhood, right? So those are some of the things. Just don't wait. Get the application done. Bite the bullet so that you can go do the fun things. You can still go look at fun properties with Jordan, right? And talk to him about it and start getting your needs list down and see the market of Alaska, because you're probably PCSing from somewhere like Texas where you're going to buy half the house up here and it's not going to be brick, right? Like it's going to be a little bit different. Maybe not half the house, just depends on the house, right? But it's definitely not going to be brick.
Right.
Unless it's from the 60s. So,
no, 100%, man. 100%. We have to be walking around with that loaded gun. Once you're pre-approved, you have that loaded gun, right? To where you can pull the trigger on any property that's within your price range. We're only going to look at properties. That's the other thing, is it's good to know what you qualify for as well. I don't want to be showing you houses in the 400s or 500s if it's going to take you time to get there, right? If you're not going to be able to buy that home this year. So that's what's awesome. Connor's going to tell you the amount that you pre-qualify for, and then he's going to send me a letter saying, hey, they pre-qualified for this amount, and basically then anything in that price range is fair game.
Super important touch point on that. Say you guys do qualify for $400,000, maybe $500,000. Military income, you guys do get quite a bit of it. BAH in Alaska is substantially higher. BAS and COLA, I can even gross up those numbers because they're non-taxable. You may qualify for a huge house, right? Like way bigger than you need. But that's not the number that I want to go off of, right? So my two questions are, how much house do you actually want to get? So they're gonna be like, I've been looking at houses at $400,000. Okay, what's your mortgage payment want to be? $1,200. Okay, well then you're not buying a $400,000 house, right? Or you might find that interest rates are lower now, so you can buy a bigger house for less money, right? Maybe some different down payment options, and some of those things, like just because you can afford it, technically on paper, doesn't mean you have to buy it. I don't want to put your family into a hardship. We'll even talk about paying off, rather than doing a bigger house, we'll talk about paying off car loans, credit cards, and really work on the cash flow for the whole household. So a full wealth checkup. Because again, just because you could buy it does not mean that you have to. Same reason why you don't go buy the freaking awesome $200,000 Tesla. You're still going to end up buying like a supercharged Mustang or Corvette or something, right? Like we all know E3s, E4s, right? But just because you buy it, don't buy it. Talk about how much you want to do. Talk about a plan over the next 3 to 5 years, how much you're going to be putting into it, extra payments, all those kind of things. So thanks.
Awesome, guys. Well, we're going to sign off over here. Once again, if you're interested in getting started right now, while interest rates are amazing all-time lows, we're back to that point, the point that they said we'd never be at again, I believe this time last year, but yet here we are. So like Connor said, now is a great time to get more house for less money, basically. I mean, on the monthly basis anyway. So, and pay less interest while doing it. So that's all good living. Fill out an application with Connor, and he can really lock in on what your situation is, right? Like this is a general overview to get you equipped to start the home buying process. That's what we want to do. We want you to be educated so that you know what we know, so that everybody's on the same page. But what Connor's going to do is once he can get a look at your situation, we can advise you a little bit more for your exact situation, which is going to get you into a house faster with more money in your pocket. So Connor, I want to thank you so much for taking the time to share what you know. And they can fill out your application and stay in touch with you with the number on the screen a moment ago. And we'll be in touch soon, guys.
Sweet.